you trust your bank completely? What if I told you that while banks provide essential services, they also operate with a complex set of tricks designed to maximize their profits from your money, often without you even realizing it? Most people are loyal to their bank, never questioning fees, interest rates, or the hidden ways their money could be working harder for them. This loyalty can cost you thousands of dollars over your lifetime simply because you're unaware of how the system truly works. In this video, I'm going to reveal 10 banking tricks the industry hopes you never discover and how understanding them can save you money, boost your savings, and make your bank work harder for you. Get ready, because the number one trick isn't about fees. Trust me, it's about a hidden power you have that most people never use, and leveraging it will put hundreds of dollars back in your pocket. Before we unveil these bank-beating secrets, please take a quick second to hit that like button. Subscribe to Finance Butler for more insights into truly optimizing your money, and share this video with anyone who uses a bank. And as always, I'd love to hear your thoughts, so drop a comment below and tell me, what's your biggest frustration with banks? 10. The low-interest savings account scam. You put your money in a savings account thinking it's growing, but many traditional banks offer abysmal interest rates, sometimes as low as 0.01% APY. Meanwhile, inflation is often 2 to 3% or higher, meaning your money is actively losing purchasing power. Banks use your deposits to fund higher interest loans, mortgages, personal loans, profiting from the spread. They rely on your inertia and loyalty to keep your money earning next to nothing. The fix: move your emergency fund and liquid savings to a high-yield savings account, HYSA, often found at online banks where you can earn 4 to 5% APY or more. This is passive income you're missing out on. Is your savings account earning less than 1% interest right now? 9. The monthly maintenance fee loophole. Many checking accounts come with a monthly service fee, for example, $10, $15, which feels unavoidable. These fees silently chip away at your balance, costing you $120, $180 a year. Banks impose these fees to ensure only profitable customers, those with high balances or many transactions, use certain accounts. They're counting on you to pay without questioning. The fix: most banks waive these fees if you meet certain criteria, for example, minimum direct deposit, maintaining a minimum balance, or a certain number of debit card transactions. Better yet, switch to an online-only bank or a credit union, many of which offer completely fee-free accounts. Are you paying a monthly maintenance fee on your checking account that could easily be avoided? 8. The overdraft protection illusion. Your bank might offer overdraft protection, automatically transferring funds from a linked savings account or credit line if you overdraw. This sounds helpful, but it's often not free. Many banks charge a fee for each overdraft transfer, for example, $10, $12, or charge interest on the credit line. This is designed to save you from a larger overdraft fee, $35, but still generates income for the bank. The fix: opt out of overdraft protection if it comes with fees, or find a bank that offers truly free protection. Better yet, set up low balance alerts and maintain a buffer in your checking account to avoid overdrafts entirely. Are you unknowingly paying fees for your overdraft protection service? 7. The A fee double whammy. When you use an ATM outside your bank's network, you usually get hit with two fees, one from the owner and another from your own bank. These can add up to $5–10 per transaction. Banks benefit from you using their network or paying to use others. They rely on the convenience factor overriding your awareness of these charges. The fix: plan ahead by using your bank's app to locate in-network ATMs or choose a bank that offers a bank fee reimbursements. Withdraw larger sums less frequently to minimize fees. How often do you get hit with out-of-network AMET fees, silently draining your cash? 6. The loyalty tax on loans and rates. Your bank might be offering new customers fantastic rates on mortgages, personal loans, or even credit cards, while your existing rates are higher. This is the loyalty tax. They take existing customers for granted. Banks know that switching accounts or refinancing loans requires effort, and most people won't bother. They profit from your inertia, offering better deals to attract new business while quietly increasing profits from loyal customers. The fix: don't be afraid to shop around and negotiate. Call your bank, mention competitor rates, and ask for a better deal. Be prepared to switch if they don't budge. Are you paying a loyalty tax by sticking with your current bank without shopping for better rates? 5. The sneaky paper statement fee. In today's digital age, many banks now charge a small monthly fee, for example, $2, $5, for mailing you paper statements. This adds up to $24, $60 annually for a service that's easily replaced. Banks prefer you go paperless to save on printing and mailing costs. They're counting on your preference for physical mail over convenience and savings. The fix: opt for paperless e-statements through your bank's online portal or app. All the information is available digitally, often with better security. Are you still paying for paper bank statements when digital options are free? 4. The relationship account minimums. Banks often advertise premium checking or savings accounts with waived fees or higher interest rates, but they come with stringent minimum balance requirements, for example, $10,000 or more. If your balance drops below this threshold, you're hit with hefty fees that can quickly wipe out any interest earned. Banks profit from the majority of customers who fail to consistently meet these high minimums. The fix: choose accounts with realistic or no minimum balance requirements. Don't chase premium features if you can't consistently meet the terms. Are you struggling to maintain a high minimum balance just to avoid fees, or are you looking for simpler accounts? 3. The international transaction fee trap. When you use your debit or credit card for purchases in a foreign country or for online transactions from international merchants, your bank often charges a foreign transaction fee, typically 1 to 3% of the purchase. These fees add up quickly when traveling or shopping internationally. Banks profit from cross-border transactions without providing any extra service. The fix: get a credit card or debit card specifically designed for travel that waives foreign transaction fees. Many online banks and travel credit cards offer this. Are your debit or credit cards hitting you with foreign transaction fees when you travel or shop online internationally? 2. The Roundup savings gimmick. It's not enough. Many banking apps offer round-up features, where your purchases are rounded up to the nearest dollar and the spare change goes to savings. It feels effortless, like a trick. While it can encourage micro-saving, it's often too small to make a significant impact on your financial goals. Banks promote this as saving, but they prefer you keep most of your money in low-interest accounts. The fix: use roundups as a supplement, not your primary saving strategy. Automate larger, fixed transfers to a high-yield savings account or investment account first. Are you relying on roundup features as your main savings strategy, or are you automating larger amounts? 1. Your untapped power to negotiate and switch. This is the ultimate secret the bank doesn't want you to know. You have far more power than you realize. They rely on your inertia and discomfort with negotiation. You can call your bank and negotiate fees, for example, overdraft, late fees, ask for a better interest rate on a loan, or even request a lower APR on your credit card. Most importantly, you can switch banks entirely if they don't meet your needs. Online-only banks and credit unions often offer better terms and fewer fees. The banking industry is competitive, and your business is valuable. Don't be afraid to demand better service or take your money elsewhere. When was the last time you called your bank to negotiate a fee or a rate, or truly considered switching to a better option? Understanding these banking tricks transforms you from a passive customer into an empowered financial manager. If you only caught the end of this video, you missed crucial insights into the hidden fees, sneaky interest traps, and subtle psychological tactics banks use, including the #1 power you possess to fight back. Go back and watch from the beginning to unlock these secrets. If you're ready to stop letting the bank profit off your ignorance and start making your money work harder for you, check out my next video, linked right here, where I share a step-by-step guide on how to audit your bank accounts and negotiate for better terms today. Don't forget to like this video, share it with anyone who has a bank account, and subscribe to Finance Butler for more practical strategies to master your money. And tell me in the comments, which of these bank tricks are you going to tackle first? Let's take back your power.